Okay, so I'm on, I think. Hope I'm on. All right, so I'm gonna cap myself at 1 hour today. Um, all right. Was a pretty interesting day. Now on my thumbnail, um, has something here. Hold on 1 second. Give me 1 minute. Okay. So, hey, howdy, what's up? How are we doing today? We're sitting pretty. Okay, 1 second. I'm trying to look up my uh right here. So that's my thumbnail. Of course, like everybody's kind of like, what's going on here, right? So this is like, is this a free market? Are like retail can't even participate in this price movement right here? Like, what the hell, right? And so it happened like that in a couple of times. So I'm like, okay, this is a free market that we're all talking about to try to protect, right? So that's just an anomaly, and of course, you can't see that particular action on other platform except Vibo. I don't know about Robinhood. I haven't checked on that one, but Robinhood doesn't have a kind of chart like that. So, but at the same time, this is a 1 minute for trading view after hours. It doesn't do anything like that. So that's again, it just shows what's going on, right? Off trading, dark pool, whatever speculation you might have, but this is just the evidence that we see, uh, especially in this stock, right? Uh, I've never seen any things like this happen in this stock. Especially when there's so many people are trading in and out too. So perhaps that's what happening. But really, this is like a 1 minute, right? 1 minute candle right here. And this is what known as coined as a whale teeth. And people were kind of like, yeah, I saw this happening. I was like, oh, let me just do a snapshot real quick here. So that's just what's happening here. But right now I'm just chill. So hi Giga, what's up? What's up? Hi Menu, what's up? I bought a few share around 25. Okay, dollar cost averaging down. That's good. Um, yes. Now when I said we, I don't know who is we, but I was expecting a gap fill yesterday, which we did. We did get that get that one. So perhaps there's another gap fill down here. So you might get another opportunity manual right there. $19 might be the gap fill the next one, but who knows? Depends on what the news is coming. We're still expecting the dilution news. I mean the share offering completion, right? We're on sitting on the on edge here to try to find out how much money they actually got from the share offerings. And when we once we know what it is, we're gonna be able to kind of evaluate the valuation of this company. I know, people have presented the bear case uh, quite a bit, right? We've heard a lot of negative news about this company, how it doesn't make any money, right? That's the sentiment, prevailing sentiment about this company, that this company doesn't do anything. Okay, all right. Well, it's remain to be seen, right? It's what make market, in my opinion. So I reserve my right to change my mind, so to speak. Crime, right? I mean, come on. Like, what do you make of this, Manuel? I mean, I'm kind of curious on what you think about that whale teeth debacle over there. And it gaps up like it's not like a few cents here and there. Okay, it's not like a few dollars. This is like $10 gap. It's ridiculous, you know. I will definitely at sub 20. Ron Kitty will pump it before his call expires. Like, He's not pumping the stock, you guys. Come on, like you think he's pumping this? He's not dumping either, and he just doing a YOLO update. So I think I saw it somewhere over here that he hadn't dumped. You know, like people saying that oh he's pumping the stock. It's like okay, well let's look at the case. He's just averaging down. Look at his cost average over here. Don't you? I mean, how about that perspective? People don't even get that perspective. Look at his price paid, meaning that he was averaging up, averaging down as the stock goes up. Like, what was his original position? Do you think? Let's look at it real quick because back in the day, okay, back in the day over here, I'm sure now I don't know his exact position, but he was buying over here, right? You know, that's the whole squeeze scenario over here. You know, you could see that when it was up here, he was like all surprised. It was like, okay, yeah, this thesis might actually happening. Yes, there might be actually short squeeze happening, right? And then when they removed the buy button, he famously doubling down on this particular uh, uh, juncture over here, right? So if he had if he had not averaging up, his average cost would have been lower than $10, right? So to make the case that the guy is pumping or whatever, because like he went silent for a while, right? So my speculation, of course, I can't see his exact position over here during that time, what he did with the money. I could assume that he's been averaging up here as well and then try to average down over here and load a boatload of more, you know, over here to try to at least get his cost average down to $21 right now, right? So the call option that you're seeing, I'm sure this is because he's bullish on this company, right? That $20 would give him a lower cost average than $21. So I'm like, what the hell? He's manipulating the market like ay 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 you guys. I know, I understand you guys like um sure. I mean if he's pumping the market then what is the institution are doing out there with their Nvidia, you know, bull thesis, right? You know, if you look at the now I don't have access to the whale or whatever. What is it? The unusual whale or whatever. If you look at if anyone who have access to unusual whale, you could look this up for yourself. That the insider are actually or institutions are offloading on their position of Nvidia, right? But meanwhile, you know, the media is pumping it up. So what is that? Is that pump and dump? Of course it is pump and dump, but they don't talk they don't tell you that because the institution are doing it, right? So when this guy who like again, regular person who just so happened to know his data pretty well, you know, now he's pumping and dumping and he's proving to people like, hey, I haven't even sell. Like I'm bullish on this company. Of course, I'm making a stupid amount of money bet on this particular company, but it just shows that he's bullish on the thesis that he had. Um, like I said, if he lose this arm of his position on the call option, he would be still sitting pretty because he have 5 million shares in GameStop. And my perspective on that is that that 5 million shares is going to be $1 billion in 5 6 years from now. You know, when the thesis is playing out as we are watching it happening for years to come. And he's saying that too in his video, in his live stream. People was like, oh, it's just a disaster. Really? Is it a disaster or just, people, he's having fun, right? And it just, again, like, oh, how can anyone spend this much money? Look, it's irresponsible. It's like, it's his money. Like, duh. Oh, man. And people, again, jealousy, right? It's a beautiful thing to see all of the institution and like I said if this is a portfolio of traders that is making money for the bank, I wouldn't think that there's a any problem with this at all. In fact, he's probably have a fat bonus on the amount of money that he's being able to make for the bank. So he just used his knowledge to make himself rich. That's it. I mean, that's the perspective right there. So, hi Sharon, what's up? Thank you, thank you. My guess is a normal because of low volume. Okay, that's your okay. All right, I uh, respect that feedback, but I go with crime. Okay. No, I don't know. I'm just speculating, but yeah, I mean that's probably a normal reaction to things, but I just think something afoot here. What is your theory for Ron Kitty not selling his call when the price is over 50? I think he's gonna exercise. Um, I think he have the ability um to to have that money before it go out of the money. Um, it seems like he understand that the OPEC cycle is going to create that movement, right? Because again, quad witchy, whatever the F it's called, I don't even know. Apparently, like every third of Wednesday, I mean every third of Friday of the month, um, that OPEC cycle is going to create a implied volatility. It's you know, and I'm sure that's what he's playing for right here. This is the call option. It is for that. And I think he expect a run, and of course the bullish case on the earnings reports and uh, excitement on what the company is going to do with the billions that they're going to raise, merger acquisitions, all of that is in play as well. So it's remained to be seen, you guys. Like it's a very bullish point of view over here. Of course, it's not a financial advice. I'm not telling you to buy, sell, hold, or anything of this company because I'm biased as well because I'm already established a position in this company. So seek out a different opinion if you like to have a different opinion. Um, I mean, I don't think it's going to go down to $20, but like I said, that gap could be filled if we had not received any good news or even bad news. Perhaps when we buy the company, the news media is going to be like, this company is shitty too, so don't buy into it. It's like, okay, all right. So any news that they could to try to smack the price down, they would do that. Again, it's a game. It's a game. So understand what position you're gonna stay in. If you want to do call, puts, whatever, just make sure you know the risk associated with those. For me, I have a lot of trading accounts, so I divide my strategy up that way. So it's better to have more than one strategy, which for me, buying shares whenever possible, um, and play the call options or whatever. So today I bought one call option at $20 strike price in the money. Let's see, I paid $900 for that one, but it's gonna expire, you know, oh, like way before. What's it? Uh, August. Yeah, August 20, not 20, August 16. Sorry. So it's a little longer than what Keith, but just to be safe, I bought the in the money call option for $20. My goal is to try to sell a covered call against that when the run's happening after the announcement. So again, you could play it that way too. It's very simple to do, but it's very risky too. I could lose that $900 by the time the contract. But again, depends on the price action, right? So again, for me, it's still bullish. And of course, like there's a lot of technical analysis people who have been covering this stock for a long time. Um, you know, oh, much more knowledgeable than me. But I just go by the gap feel because it seems like okay, it happens before, so it might happen again, right? So as far as the gap fill up here, 23, it went up already. So there you go. And it just bounced off of that particular area of expectation, perhaps. But anyway, so if you look at the fear and greed index, it's kind of like creeping up to extreme greed here. But this is the daily candle. If you look at the hourly, it's coming to neutral, right? Territory. As far as a weekly, it's still in the fear zone. So yeah, there's a lot more room to run over here. So buckle up, right? Buckle up. Hold on, let me see. Just to show you. Like when usually the best time to buy is when, like those green, I mean those red, right? It's not red yet, but when there's fear in the street, you want to buy, right? Again, if you're thinking about this company in the long term, in my opinion. Okay. I think RK will exercise a fraction. Okay, I don't think he has enough money for all his options. All right, that's fair. If Rowan Kitty is really in it to stick to hedge fund, he will sell enough of his shares to exercise. Okay, I mean that's also possible too, right? But I don't know if he would sell the shares though, because share is much more important than the call option, I think. If anything, I agree with Manuel. He might sell half of the call and just get 6 million shares more, or he was only going to add 5 million shares of GameStop more, to get even 10 million shares. And at 10 million shares with the current dilution, or at least current, well, I mean, I said current. I still have to look at the filing. I don't know how much they're able to make, or how much shares they're diluting yet. So assuming that they are doing the whole 75, with hold on, 10 million shares divided by the float, that's going to give him 2% of the company. And so remember those cat thing that they people are kind of decoding the cat head on his early uh, latest tweet. It says 5, so maybe he's aiming to get 5% of the company, you guys. So if that's the case, what is that? Oh wait, can he do that? So hold on. So 12 million divided by. Oh, sorry. I'm trying to figure out what would be 12 million exercise plus 5 millions that he have divided by the current float. Ah, so it's just a little bit short of 5%. But again, he didn't foresee the share dilution. So if we go by the um, last load before the 75 million, that's close to 5% of the company. Again, it's just my kind of decoding his his tweet. Of course, none of this is true. I'm just like speculating on what that means, and even that it might be a stretch too, right? To say that, oh, let's just zoom in the cat, and then there you go, number 5. Of course, like people could see anything through that. It could just be like a bad, editing of the cat's head. Let's see. Okay, so where was I? But yeah, as far as the option exercising and all that stuff, that's remained to be seen. Everything is speculation until it happens, all of that. So, implied volatility is kind of still high, obviously. This morning I saw like at 1.400%. So, of course, this is why I kind of play it, covered call through a poor man covered call. Okay. So, I'm only do a couple contracts at a time here. So, I'm not risking my whole portfolio over here. And for me to go long on this company, the safest thing for me to do is to own shares, and just own as many as you can at the bottom price. Or, who knows? Like some people think that this is overvalued. So you might want to wait until it dropped to $15, right? But again, there's a lot of people who are waiting for $5 and it never comes, right? Over here. And so you might be missing out if you wait too long. So again, it's it's just a matter of, okay, can you stomach the drop? Can you uh, handle the volatility in this company? Of course, again, you have to think of it as a long term investing because it seems like a battle over here, whether you think key thesis is right or the short bear cases is right. So, um, in which direction you could short it? You could, add to your short position. If you think it's going to go down to 15, okay. If you think that it's going to go to that price and know how to bet down, go ahead, do it. I mean, I wouldn't, but that's just me. All right, so okay, talk about implied volatility. So current one is close to 265 right now. It may spike up when the news arrives, so that could be a play as well. You know, so when Key's contract comes to play, this implied volatility would be a lot higher. Maybe 300%, right? In which case his contract is going to be more valuable in that sense for next week as well, due to the volatility of the stock. And I'm sure he understands this pretty well, and that's why he does what he does. Um, you know, he's a genius, right? And of course, people like to think that he's an idiot, but okay, that's on them. They're missing out. Okay, so for the bear case out there, obviously they are always pointing out the sales decline and the revenue is not there. Companies losing $32 billion, sorry, $1 million this quarter. This is quarter one, mind you, right? Because quarter one is always the worst quarter that we have. And so it's remained to be seen. Second quarter, I think it's going to be positive because last quarter they only lose $2.8 million. So I'm sure with the marketable security right now and more money, they could cover that pretty well. I think that's also a case for a bull case for GME as well. Just like the dumbest thing that they could do if, let's say, leadership is brain dead, right? And they don't do anything with with the billions. They just park it in the marketable security and then earn interest on it. So even the most brain dead leadership would be able to make $100 million out of this company, or for this company, for shareholder. And so this is why I go with shares and not call options and all that stuff, because call option, if you buy call, you don't actually own the shares unless things go um, parabolic, right? Of course, all of that is speculation as well. So yeah, that's why you have to be careful. All right, so they still have a low interest, very limited. I looked it up, and it was like $14 million or something like that left for that one, which is a very small amount of debt, um, and it's only like what 0%. So of course they're gonna keep that for $14 million in debt in there. There's no reason to pay for it, right? We could use the interest that comes from that $14 million to pay for itself. So that's good. And let's see, when is the earnings call? I think it's like tomorrow night. No, 13. The 13th of June. So that could be. Now let's look at the option chain real quick. Obviously, we have one more week to go. Right now, a lot more call out of the money, a lot more put in the money. So let's see the support over here. Seems like $20 is going to be a hard support over there because there's a lot of put contract might scoot into the money, and then in which case, market maker would have to sell those shares into the market. And when you sell those shares into the market, it's going to cascade the price down. So perhaps that's when you're going to get that $19 gap fill quickly, and then moving up from here. So again, all speculation here based on the option chain that I see. But max pain is $30 per share. So here, depends on how many calls or bull people who are kind of like bullish on this company, bidding the contract up or down, right? So the option chain, I think, moves this price point a lot more than the actual um, stock itself. That's why, again, when people say, oh, retail move the stock, no, this is ridiculous to say that. Now, it seems like some people already kind of take profit on the call option over here uh, for June 20th, right there. So perhaps that's where the price coming down. Um, like some people sold out of this particular one because last time it was 300,000 all contract for last week, right? So some people probably take profit, and so there's nothing to be scared. Apparently, we know who owns to 120,000 contract here. That's Keith. So 30 contract is just people copying his bet, I guess, right? And so, yeah, I mean, can somebody buy more over here to try to ramp it up? Who knows? Institution, right? Institution need the shares, or ETF or whatever it may be. So yeah, I mean, it's fun to look at all of that. Now, Nvidia just did the stock split. A lot of chattering about how it's going to go higher. I doubt it. Of course, I don't have any short position at the current price, at the current time. But of course, I'm looking to short this company. But again, when I short, I use the inverse ETF. Okay, of course, this is my bear case on the Nvidia. Of course, I don't. It's my own thesis over here. Listen to a lot of like bad things about this company, and the fact that the media is pumping it while insider is selling, and institution also sell out of their position. I mean, offloading it, right, so to speak. So that is not a bull case for me. Strong buy, right? Strong buy. Oh, 20% up from here. Great. All right. So that's remained to be seen. But yeah, I wouldn't touch this with the 10-foot pole. But I've been saying that since like $1,000. So you would have missed out on $20, 20% up if you listen to me. So, all right. So what am I looking at here? Let's take a look at the perspective of people. But let's look at this new segment here. This is the only news segment that kind of like fair, in covering what Keith is doing. But even with this segment, even with the case that he's not manipulating the market, you could tell the tone is skewed toward, oh, maybe the meme stock should not be allowed or whatever. So let's listen in, and we'll talk about it later.
For more right now on what regulators may be looking at when it comes to trades and GameStops, we want to bring in Firdos Altai, who served as senior counsel in the enforcement division of the SEC. And Firdos, thank you for being with us today. There were a lot of questions about what he might say on Friday and whether or not that would land him in hot water. From what I saw, didn't seem to be anything that would necessarily be a big red flag for regulators. But what did you think?
Agree. I mean, he's a smart guy. He holds many FINRA regulations. He knows exactly what he's doing. I saw the whole thing as a stream of consciousness. He's not telling people what to do. He's only discussing his personal opinion. That doesn't give regulators a lot of wiggle room with what they want to do.
Yeah, it's kind of hard to label him a market manipulator. He answered questions saying it was just him. He didn't have other people who were in it with him. That would have been something they would have watched very closely. And he certainly seemed to lay out and show what he was holding. I mean, it showed that he would have lost quite a lot of ground just as the stock went down, too.
If anything, what he's doing right now is setting up a perfect defense for market manipulation. He's giving regulators everything that he would use in his defense if they brought up a market manipulation. I think ultimately what they're trying to do is ban him. That's a very high bar for them to reach.
Ban him from ever being able to trade again?
I think so. I mean, that would be the only outcome, right? If he was charged with market manipulation, they would be seeking a lifetime ban. They would try to get him out of the market completely. You see what E-Trade is doing. They're unhappy. However, they're getting the best press they've ever gotten. Their information is on every single thing he posts. So they should be happy right now, in a good position as well.
That's a ridiculous, point of view. That's why I was like, why are they so butthurt about people talking about your platform? And if you are a middleman, you're receiving business left and right. You would want people to trade on your platform, duh. Unless something is other nefarious things is happening, perhaps you don't have the shares to deliver. So again, it's protesting too much and too soon, in the sense that somebody is freaking out, right? Must have. Because normal operating business, a normal order of business, the more interaction that your platform has, the more money you make, because you make money based on those trades, right? Commissions or whatever, whatnot, and the interaction that you have for more clients, for more, publicity and all that stuff as well. So the fact that they are trying to kick him out of the stock market because of this, why? Because he make too much money. Like, it's almost like the casino. It's like, oh, wait, this guy make too much money. Let's kick him out of the casino. It's the same BS, right? It's ridiculous. And again, this man is bullish on the company. Okay? Leadership. Now, you could argue that Brian Cohen is a dumb, stupid person, just so happy to be lucky to be in the GameStop. You could do that. But okay, if this guy, Keith Gill, is bullish on the company, so what? Because why? You think Ryan Cohen, Keith Gill, just like pump the company based on like, how can you pump the company to other people who doesn't agree that Ryan Cohen is oh my god, I can't even put my thoughts together here. So my point is, nobody would have believed him if Ryan Cohen is a dumb mofo, right? Meaning that leadership has some water to hold here, have some at least expertise for other people to be like, oh yeah, I agree with that thesis, right? So we're not all dumb people over here, right? Now, I'm not saying that other participants are not dumb. There are some people who are dumb as well, meaning like they think that they buy call option, this week and they're gonna become a billionaire tomorrow, right? So that's dumb. Meaning, if you want to do that, of course you're risking thousands of dollars of your money buying call option, thinking it's going to go to $100 a share next week. Yeah, that's the risk that you're taking. And if you're losing money, of course, that's the casino that you're here to play, right? Okay, you're welcome to it, but to say that because this is somehow overvaluated, Ryan Cohen is not at least trying to do something here with this company that will add value later on in the future, right? It just so happened that the stock is being traded so many times, and it's the most popular stock for people to be trading in in this company, in this stock in particular, and you could see it right here. I mean, the volume speaks for itself, right? Remember, when the volume is like 3 million, 2 million, what was the sentiment then? That, oh, retail, this stock is dead, da 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 da, right? All of those sentiment will come back. I knew this. That's why I was like, okay, all right, let's get ready, right? Of course, I didn't know the exact time that it's going to happen, but I thought it was going to explode over here. I thought it was going to explode over here. But every single time I add more to my position, dollar cost averaging down. So that's why that strategy is so powerful, in my opinion, to do, because again, you don't know when it's going to explode, but when it explodes, um, it's going to give you multiples. Hopefully you've been consistent in adding more shares, and enough so that the cost average that you have right now is above the trading price today. So that's the name of the game, and that's how traditionally you invest into the company, based on the thesis that you have. Now, mind you, think about this. When people tell you this company has no fundamental, I challenge that, right? Because they say the same thing over here, right? Say the same thing over here. Say the same thing over here. Yes, social sentiment helped save this company from going under, right? You, at the very least, you said that, and of course, leadership's going to take advantage of the price action. It's a good management, right? When you have the demand for your stock, and your company doesn't kind of is not up to that valuation yet, it's smart. It's the smartest thing to do, to at least capture some of that volume craze over here, right? And the fact that leadership is wise to do that. And keep in mind too, Ryan Cohen also dilute himself, because he is also the shareholder over here. So the percentage of the company, it used to be 12%, now it's less than 10%. So, you could theorize that eventually he's going to add more, hopefully, right? If not, okay, maybe he's not as bullish. But also, think about it. He bought $10 million up here, right here, $10 million at $22 a share. So if you buy it at Ryan Cohen, uh, just so you know, so if the stock goes down to this particular level, uh, it's not a rocket science to say, okay, if he's bullish about this company, he's going to add more to that position as well as the CEO, with his own money, right? Um, uh, and that's the selling point for this company as well, is that the leadership that you see, the board of director is aligned with shareholder because they use their own money to buy into the stock. That's a revolution that we're trying to kind of, or that I support in the corporate America, right? Because again, he's famously saying in his last annual shareholder meeting that the executive usually are wasting money, delegating the task without any expectation of a loss, risk of a loss, risk-free compensation type thing. And he's famously saying that in his last one. So of course he uphold that principle pretty well. I mean, you could say, of course, everybody has their own opinion on Ryan Cohen and the leadership here. But I think, as a shareholder myself, I'm pretty happy with what they're doing so far, right? Now, what I was trying to point out to you is that over here, when people are like crazy, about this stock, the company was losing money over here, right? And you probably like, oh, they're losing money now. Okay, well, they lose more money over here. And then they lose less, right? Make some back, right? See, like increase in revenue over here. Nobody say anything bullish about there, right? Increase revenue over here. Nobody's saying some, okay, they're actually improving. Not a peep from people like they're increasing revenue over here. What happened over here? Okay, they decrease in revenue, but top what is the earnings per share went up or higher than expectation. Nobody say a peep over there. And then in the meantime, look, we beat by one time, beat 2 time, 3 time, 4 time, right? And so all of this is still negative sentiment. And of course, the reaction after that, you could see this is why, because you spend too much energy to suppress the price down here, right? To get it to down to $10. And that suppression is what you see that explosion is over here, right? Again, I'm just speculating, right, based on my assessment on this company. I'm looking at it at a different angle here. And mind you, I bought into this company after Keith has been gone silent already, right? After Keith testified. And I thought, like anyone else, that the squeeze was over. And I got into the company for the fundamental of it, for the leadership, for the turnaround thesis, right, that we all have here. And that's somehow, leadership is trying to turn this company around. Truthfully, it's not to pump it to you, no, to create a well-run business that retail business, right? Reconnect successful. Oh, I was disconnected for a while, guys. I'm hoping I'm back. I'm back on live. Okay, so let's do that one. And sorry, so let's finish up the segment over here.
I didn't think about that this is free advertising, whether they like it or not. What do you just think about the retail movement in general? It's something that we saw the huge rise up during the pandemic. There's still a lot of active retail trading. And look, on Wall Street, people have always said they want people to be involved in trading. What do you think of this brand of retail trading?
I think it's fantastic. For the first time, individual investors are out there. They're out in front. They're learning from people. Now, look, meme stocks, there could be an SEC rule on meme stocks. Maybe they just don't like that. But retail investors are finally getting into the market. They're starting to understand what's going on. They're trading their own money. And that's great for the market. And if Wall Street wants to try to beat retail, they're doing that right now. This is a game. Wall Street is the game. And now regular investors are having fun too.
Having fun, and I guess part of it is just getting people actively involved. What's the right way to go about this? Because you don't want to see retail investors who are left holding the bag if there's a big movement that is not based on fundamentals and things that get tossed around. But look, people have thought that Wall Street was rigged for years and years anyway, and that the retail investor could never win.
That's true. I mean, but
She's like, that's true. The stock market is rigged when the big guys are winning over there, but that's true. But the meme stock is the problem over here. Of course, like when that sentiment is kind of like prevailing for a decade to come, and it's very unexpected. No, actually, it's surprising to me that people are ups in arms about this one, and this is why the dead giveaway, right? There might be something here that I'm missing on that end to where, okay, why are they so protesting about just this one stock and this one guy who's been successful, right? Of course, they would like to call market manipulation on that end, but he's trading based on publicly available information that anyone would be able to know. If you know where to look, you're gonna find it, right? So, and he's very diligent at what he does, and he's very knowledgeable. He has license and all of that. So, yeah. Is this a true YOLO based on just random guess. No, he truly believe in the company. That's why, again, I'm like, it's comical to me that these people are calling market manipulation.
But here right now, with these types of meme stocks, Keith Gill particularly, everything is public, right? Perfect information makes perfect trades. That is the baseline of economics. The more retail investors have actual information, the better decisions they can make. Right now, we're seeing retail investors act very differently from how they did back in 2021. We're also seeing the street act very differently. They're reacting to Keith Gill. They're reacting to the positions he's showing that he's holding and affirming that he's holding. This is what the market is supposed to do.
Yes, this is what the market is supposed to do. Now, she's a former SEC senior counter, okay? So if you don't trust me, there you go. There you go. Please have some credible people to talk about this stuff with me as well. Now, of course, I'm just pick and choose, like cherry picking her comment, right? I think again, like reiterating her point of view of where perfect information make a perfect trades, right? So this is why they are kind of muddle the information about this company, that this company doesn't do shit, this leadership doesn't do shit, this company over and over and over again to kind of give you the impression that the company doesn't have any value added to it and the growth that it's going to ensue. Again, I know it's frustrating for people to not know what the leadership is doing, but this is the surprise element that I don't want Brian Cohen to just go, hey, 5 years from now we're gonna go into this. Hey, 2 years from now we're gonna go into this. Hey, 6 months from now we're gonna go to this. Why would you do that, right? Why you tell people the game plan when okay, if he doesn't have any plan, the worst case scenario, he's gonna make money on top of that interest, right? While he's looking for other opportunity. Um, my 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 point is that no matter what, this company is gonna win. In the sense that if they are dumb, they will make $100 million based on $2 billion in the marketable security for now, until the opportunity presents itself. Now, my speculation or my thought about those billions, think about it. If the market crash and everybody is closing doors left and right, right? Retail, whether Target, Home Depot, whatever, because like they're presenting a earnings that is not supporting their big footprints, right? So of course they're gonna lay off people like crazy. Now, when GME has the ability to expand, that's when GME could possibly become the biggest employer in the country. I mean, has anybody thought about that? Of course not, right? And so that's a great possibility to have to have this much cash on hand when that happens. Of course, again, I'm not telling you to scare you or anything like that, but the data presented that we're actually the consumer is kind of like pinched um, because of the inflation, 2%, 3% a year over here will add up to, 10%, 20% real rate of real rate of inflation over here, over the years. And we've seen that. And so everything went up in price and all that stuff. So again, that stuff happens all the time, but the share price will crash, sure, but the actual company itself will be able to kind of build up the balance sheets, build up the workforce that it needs to do in order to grow into that environment, right? But yeah, no matter what happened to the economy, so to speak, the company's gonna have the ability to not only survive but thrive in that as well. So, like I said, it's so much, so much. I mean, layers of amazingness, right? There you go.
How much of it, though, is different than what day traders were back in the late 90s, early 2000s? I mean, it's one thing to be an investor. It's another thing to be a trader. And it's a lot harder to be a trader, whether you're a pro or whether you're a retail investor.
Yeah, there you go. So that's exactly the sentiment that I have as well is that that's why I build the strategy that I have in this particular stock because okay, if I can't trade and take advantage of the price fluctuation, then at the very least I will, own a piece of this company in the long run. Like again, if you believe in the company fundamental or the growth of this uh, company in the future, also the transformation that is already happening to this company already. So it's stage one. Stage one is to make sure that the company doesn't burn any more cash, right? Stage two is to uh, to stabilize, the balance sheets, and I think they're into stage three right now, right? Stage three is to expand, right? Grow, right? So right now we're setting up for that. Of course, I'm giving them 2 years. It could be more. Who knows, right? Um, I'm hoping I'm still on, you guys. I got disconnect one, but whatever. All right, so that's one new segment there. Let's take a look at Child's Pain here. Now, he hadn't talked about GameStop, when Keith wasn't here, but it's kind of refreshing that he's talking about it now here.
All right, folks. I want to talk now about the last couple of weeks. There's been a whole lot of talk about manipulation by this roaring kitty and retail investors. Somehow they're taking advantage of Wall Street. I think the whole thing is really amazing. That Wall Street and the financial media would even have the gall to be upset that someone posted their trade to make that a crime. Everything can be deemed manipulation, particularly the kind, of stuff we're seeing today. Look at the split in NVIDIA. Right? Think about this. The company announced that split on May 22nd. In the 5 days ahead of that split, the stock traded 1.7 billion shares. And the 5 days after, 2.9 billion shares. And I'm hearing commentators saying, hey, today the stock is cheap. The stock is affordable. And I do want to scream when I hear that. No, the stock is 29% more expensive than it was on May 22nd when they manipulated the public with the split announcement, knowing that they can get retail to pay up and pay up and pay up. Of course, it doesn't mean that people who buy the stock today can't make money, but the financial media doesn't bat an eye when it comes to narratives that cover up for the manipulation that is embedded in this system. Listen, I bring guests on every day, and they want to talk about their positions. People brag about what they own. Brokerage firms, they share their upgrades and downgrades. Deep pocket and investors, how they show their stuff, their positions, buffeting everyone. But this is weeks after they bought and positioned them. So what is all of that happening? It happens because they want to spur the crowd to come in behind them, the retail crowd. So there's so much manipulation going on in the market in so many ways, and so the idea that the meme stocks enhance risk, I think is absolutely ridiculous. I think these folks are worried the public may learn more about true manipulation. Over to Liz Clayman.
You know who also shows their position? Big hedge fund guys who take a position and say, look what I've done.
Exactly.
And then they watch the stock move. I mean, come on.
Yeah.
You are so right, as usual.
Thank you.
Charles, thank you very much.
Of course, but I disagree with the chart pinning GME with AMC. Of course, we know all of that, debacle there. But anyway, so I am going to go. But yes, that's all I have for this one. Just know what you hold, no risk factor in all of the things that you are holding. Understand what you're getting yourself into, and just be careful. Hold on, before I let you go. Let's see. Okay, I got that one already. Okay. Of course, NVIDIA is being talked about already. Okay, that's all I have for this one. I thank you so much for interacting with me. I will let you go. Okay, bye.